for Teslafaninsight. And today's focus is good news for Tesla. As you know, one of our focus of our show is sort of new investing information that's going on. So as you know, Moody's has upgraded Tesla, and after that upgrade, we now have Tesla with a bond rating that allows a large pool of new investors to buy the stock. So we wanted to explore sort of details of what this is about, what it means, and what it does. At any rate, just a reminder, please join us on Patreon or please take some time to like and subscribe. And we always appreciate comments and love responding to your well thought out questions. So there are two investment rating agencies that are primary. There actually is a lot of others, but the two major that are used is Moody's and Standard & Poor's are kind of, I want to say, the big dogs in the field, and they're most used and focused on by investors who want to carefully manage their money. So there are these, so right now, if you take time you're already an investor and you're involved in mutual funds, you'll notice that there's an interesting phenomenon going on, which is there are ungodly numbers of funds out there that have slight tweaks that address different issues that investors have had over time. So one of the things that we often discuss is there's a combination of parameters that makes Tesla the highest, definitely on the option size, traded stock anywhere in the exchange. Now, that could have, sort of stretched to other things, but take a look at the number of different screens that Tesla comes up on. So there's a concept called big cap growth or big capitalization growth company. Now, why do people want to do big cap growth? Well, it turns out that big cap growth is great because they tend to have a dividend. There's actually a parameter that says, for example, if there's a whole bunch of people that keep talking to me about why doesn't Tesla pay a dividend? I don't think that's a good. Well, the argument is it's actually a stock buyback. Nobody's talking about having them pay a dividend. What's interesting is if Tesla even chose to do 1 penny per share, it would all of a sudden join a new category of big cap growth companies, big cap tech growth companies that's paying a dividend. And I'd say 20% of the money out there in the big sort of mutual funds, et cetera, can't invest in Tesla because it doesn't pay a dividend. So thank all of you for thus far. I've had it mentioned a couple of hundred times that Tesla should actually buy back stock, and the stock buyback would cause a jump. The issue that pops up with that, though, is that Tesla is still in a nice power growth curve, and that usually involves investments. So I wanted to today specifically zero in on, hey, what is Tesla becoming investment grade, no longer junk grade, mean? Well, one thing that happens is their earnings actually jump. Why? Because the higher your bond rating, the lower amount of interest that you have to pay. So all of a sudden, there's an increase in earnings for Tesla. The next question that pops up is, or issue that pops up is large numbers of funds that have strict parameters what they're allowed to invest in can now invest in Tesla. Have they done so already? Well, we've seen a nice $15 jump in the stock price. And as you know, there's a lag time before all the funds have a chance to review and then buy into Tesla. So I believe that we've seen a little bit of a run thus far, but I think what we should see is another 10 to 20% jump in the stock price reflective of this change that's occurred. Now, I've been carefully monitoring the markets relative to the issues with the Fed and the rate increases. So this stuff obviously is big. That's why the banks are going under. And I would say that, unfortunately, um, this situation has prompted a lot of investors to sort of enter the cautious, don't do anything till all the dust is cleared mode. So I believe that yes, Tesla will get a nice boost out of this, but I would not be surprised to see Tesla lag slightly what would normally be its rising stock price. Now, this is especially the case today because, as you know, the Fed raised rates a quarter of a point. I've been sort of interviewing like countless people about the bank failures and the rate rise or not, etc. What I liken it to is, remember about a year ago in New Mexico when they decided to do a forest fire as a controlled burn, and then that fire got out of hand and ended up wiping out like a third of the state of New Mexico in a fire. And so there were all these inquiries, et cetera, done relative to it. But I am kind of fascinated right now because, yes, we're in this mode of Fed still raising. They're still raising because the sense they have is that there's a problem uh, with uh, increasing inflation, and therefore it has to be tamped out before it goes into out of control mode. We've talked about this before. I really think that there's a problem right now, which is the huge amount of spending relative to global entities. That's France, that's England, that's um, all of the facing Russia entities. These folks have decided that they're in jeopardy of being wiped out by Russia once they're done with Ukraine. And so all of them are buying huge amounts of military equipment, with the U.S. probably being a huge beneficiary based on how successful things like HIMARS, et cetera, has been, within the war theater. Therefore, these folks are buying so much stuff that the Fed ain't happy about the jobs this is creating. And so I had the craziest conversation with someone recently where they were saying, well, the Fed should keep raising rates because eventually people buying bullets, bombs, and other military equipment to deal with Russia will finally relent and stop buying because it gets too expensive. Well, I don't know about that because the way things are going right now, the Russians are relentless, and the folks that are nervous about what's going to happen either between China and Australia, et cetera, or all the European countries sort of ganging up against Russia, it just looks like, nah, they'll just pay the higher price and it'll just be a bigger portion of their budget because if you're facing death, the chances are you'll spend the money to stay non-dead. And so I expect the Fed is angry about those jobs being created and is trying to tamp them out to control inflation, but it ain't working. And I still think it's not going to work. The one sort of ray of hope, I think, is oil prices are falling. And Elon has pointed out a broad range of commodities that they use within the cars are also falling. So Elon's argument is the Fed is kind of focused on data that's shifting in the right direction, i.e. lower inflation from a lot of different angles, with the exception being the job market. So I digress. I want to get back to, let's talk more about Moody's and this upgrade. Usually when Moody's does a thing, other rating agencies will join. So I expect that to happen as well because they're all looking at basically the same data. The final thing that I see happening here is that you know if you're going to be a great investor, it's a good idea for you to sort of be able to anticipate the move. So one question mark would be, well, wait a second. If you're a giant fund, um, what screens are you running? So what you're looking for primarily is, I want big cap, which means the company's not going out of business and it's large enough to not get thrown around by the market. I want technology. Technology growth tends to be more reliable because, unlike growth that depend on population growth or other variables um, that add value but not the way technology does, um, that hampers your ability to get the growth you want along with a dividend. Tesla doesn't pay a dividend, but they do have the earnings that are being retained in this process. So overall, what I would argue here is that Tesla is in a great position. Um, there's a comment that was made by one of my uh, investment funds buddies where he said, the market tends to climb a wall of worry. So we're definitely in a worried market space right now. But the logic of that is that when everything is hunky-dory, um, the gap up of everything is gone. So those that are buying in a worrisome space, but with excellent fundamentals, tend to do quite well. So my next show, and probably one or two more as we head into next week, is focused on looking at what's going on with inventories of cars at the service center. So I went to the service center, did some photos. I think I'm going to put a service center photo as the uh, as how we um, give you an image to look at. But in general, I couldn't believe the number of cars that were sitting there. So in our area of Greater Washington D.C., there's been a process over the last couple of 3 years where we've gone from one service center to three. And I therefore noticed when we switched to three service centers, we ended up in this kind of interesting zone where all the data that you could pull down by saying, oh, we went by, we saw a lot of cars, no cars, medium numbers of cars that are new and coming in, you know, you could kind of ride that data. And so then we went to three facilities in the greater DC area. That's like from, let's say, um, above Richmond to kind of the Baltimore area. Let's say that's the general region. And so now we have an interesting situation where um, Tesla, in the recent, like a year ago, what they would do to try to push numbers into the quarter is simply build and ship cars out with configurations that were common to what customers wanted to see. Now, what we're seeing is that, yes, um, they're building those cars, but the service center in Tysons, which is the main one that we view all the time, is stacked with cars, or it was 4 or 5 days ago with the photo that I'll share. And my assessment of things was, oh no, I was kind of worried. But then we sort of surveyed a few friends of the show that are Tesla related, and they were saying, nah, that's not worry. Those are actually cars that have been ordered by customers that are being delivered. And there are cars that are pre-built now, but they sit in a storage facility that's away from the primary service center. So therefore, I'd have to say that after looking over, I just think it's the largest collection of Teslas ready to be sold that I've ever seen at our service center. I mean, that's like in 5 years. So I'd have to say I'm cautiously optimistic, and we'll probably do a couple more shows before we get the numbers next week, so you guys can actually see cars and assess kind of what you think about it. So those of you who are on our Patreon, I just wanted to note we actually uploaded to you the video we got from this already. And so if you'd like to be able to stay abreast of information more readily, I'd encourage you to join us on Patreon, because I think you'll find the information you pick up there will enhance your ability to understand what's going on with Tesla, etc. I do have a question for everyone, though, as I close this out. There's an article today that came up about the fact that Elon had decided to not only make the switch from having a radar and a camera, but he had decided to remove cameras from those vehicles that actually had them. And so I plan on doing a show about this tomorrow, but I definitely wanted to get some input, whether or not you think it's a good show idea or not. Part of the challenge is non-flattering shows about Tesla tends to get sort of negative comments or opposite stuff. But what I was hoping for is a lot of people would be able to make decisions about adding it back in themselves if they feel like it's important. Once again, I want to thank you for joining us. This is Greg for Teslafaninsight. Now, I'd have to say that my health tip for today is I wanted to review. We have a gentleman who is a kidney doc, and what he said to me was, "Look, when it comes to fried foods, no more than once a week. The logic is that your body is on like a 1,000-year clock, and so it tends to respond well to stuff that's been around for 1,000 years. We've developed new stuff, fried foods as an example, that your body's not really happy with. So instead of being able to work well with your body, it'll do things like, I don't know what that is. Why don't we store it next to your major organs, and we'll figure it out later." So along with the 20 minutes a day walk as well as the leg lifts, wanted to encourage you to be noteworthy of the fact that fried foods are a bummer. And I also wanted to note they taste really good, but your body is not in agreement with it. At any rate, once again, thanks for joining us. This is Greg for Teslafaninsight. We look forward to your comments. Congratulations on the bond rating upgrade for Tesla, and the high throughput looks awesome. I think this is going to be a really exciting what happens to the stock next week as we get numbers. Have a great day.